Wage pressures remain while inflation appears to be dissipating in other parts of the economy. A mixed bag of profit results on the ASX 200, and Elon Musk hosts a rally for Donald Trump on X. Welcome to Fear and Greed Daily Business News for people who make their own decisions. It is Wednesday, the 14th of August 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, mixed news on the inflation front. Price pressures in the Australian economy are easing, with supply and demand moving towards balance, according to the latest NAB monthly business survey. But at the same time, you've got wage pressures remaining elevated, working against price disinflation.
It is very difficult to determine exactly what is going on at the moment, which is part of the reason that the Reserve Bank is resisting calls to lower rates anytime soon. First, to the National Australia Bank July survey, it shows that labour cost growth rose 2.5% from 1.5% in June, but purchase cost growth eased to 1.1% from 1.3%. Retail price growth also fell to 0.9% from 1.3%. That's a fairly sharp drop. Overall, business conditions rose 1.26 index points. That's the first rise in 5 months. It's slightly below the long average, though. Business confidence fell 2 points, with falls across all industries other than construction and recreation and personal services. Now, National Australia Bank Chief Economist Alan Oster said the survey suggests robust jobs growth is continuing for now. But below average trading conditions and profits remain a real concern. The bottom line is that price pressures it's not right to say they're coming out, they're just lessening in the economy according to the NAB survey. Then we get the Australian Bureau of Statistics Wage Price Index. It shows a 0.8% rise in the last quarter. Then we get the Australian Bureau of Statistics Wage Price Index. It shows a 0.8% rise in the June quarter, below the 0.9% rise in the March quarter. The annual rate to the end of June came in at 4.1%, slightly above the Reserve Bank's forecast of 4%. Now, the wage price index has now been at or above 4% for about a year. What's that mean? Well, the Reserve Bank reckons wages at this level are unsustainable without productivity growth, and it expects the wage price index to remain relatively high given it's hard to find suitable labour. That feeds into services inflation, which is proving very tough to defeat. So, two very conflicting pieces of information on what's going on in the economy yesterday.
Sean, there was also consumer sentiment measures out yesterday. Now, you've gone on the record in the past describing we humble consumers as a miserable bunch, I believe was the exact term.
That is the quote, yes.
That you have used to describe us all. Are we still pessimistic?
Ah, yes. Still a miserable bunch out there, really. Although less so after the recent tax cuts. The Westpac Melbourne Institute Consumer Sentiment Index in August rose nearly 3%. Good news. But it remains at weak levels by historical standards. Views on family finances bounced back and was nearly 12% higher than a year ago. Now, the actual monthly shift in that is the largest in 9 years, if you exclude the COVID period. The survey also shows that rate rise fears have subsided and people are relatively untroubled about the outlook for jobs. Around housing, home buying sentiment sank back to new lows, however, but consumers' price expectations cooled a touch. Good news. We'll find out more about exactly what's going on today when the July labour force stats are released. But when you have turning points in an economy, it is very hard to read what's happening, whether inflation is coming off quickly or not. But I suppose that's kind of what we pay the economists for, even if the Reserve Bank Deputy Governor, Andrew Houser, reckons that there's not much chop at times.
Yeah, that was a terrific quote, wasn't it, from Andrew Houser? And you talked about it yesterday on the show where he walked into a room full of economists and then proceeded to,
have a crack.
Yeah, have a crack at economists who make, overly firm predictions?
Yeah. I think he just didn't like the way that they were so firm in what they were saying.
Especially when a lot of the data suggests that things are not as kind of certain as some economists are making it out to be. I'm guessing that this may be a topic that you tee off on, perhaps, in the newsletter.
Yeah, certainly gets a run, no doubt about it.
The Fear and Greed newsletter is out every Wednesday, so it's out in a few hours' time. If you haven't signed up already, head along to fearandgreed.com.au, pop your email address in, and you will receive Sean's views on a whole bunch of topics. Not just this one. And also, Sean, a fantastic video. I'll mention that one a bit later on. Local markets, how did they perform yesterday?
The S&P ASX 200 closed up just a touch, 0.2% to 7,828 points. Profit results really dominated proceedings. Broadly, the financials did best and the healthcare index did worst. That's all about CSL. More on that shortly. Outside the companies reporting yesterday, ANZ and Commonwealth Bank led the way, both jumping more than 1.5%. Westpac rose 1%, as did Wesfarmers and Goodman Group. Oil giant Santos was another strong performer. Fortescue and WiseTech Global were among the laggards.
What about international markets?
Well, oil prices have fallen back a touch, with Brent futures trading below $80 a barrel. Gold's run continues. The precious metal is back up to $24.60 an ounce. The Aussie dollar's trading at just under 66 US cents. I could have said that same sentence, I think, for the last 5 days. Really? No one would know the difference.
No, we just start copying and pasting that part of the podcast.
Right. Yeah. Boys. Cryptos, kind of interesting. I mean, not hugely, but they're continuing their slow recovery after a big sell-off a couple of weeks ago. Bitcoin is trading over $59,000 a unit, heading back towards that $60,000 a unit mark.
And just a quick mention, Sean, of the interview that you have coming up after the show. You're speaking today with Sue Lee Siao, the General Manager of Policy and Media at the Australian Information Industry Association.
Yeah, it's all about the state of the labour market, particularly in the tech sector. And just the fact that people who are being trained in technology, graduate programs, are leaving their educational experience, entering the workforce not fully prepared for their jobs. The idea being that they need 6 to 9 months of on-the-job training before they become kind of up to speed on what they're doing. It's not unique to technology. I mean, many of us leave university and have absolutely... When I first started as a journalist, oh my word, I had no idea what I was doing. So, it's not just the tech stocks, but it is a really fascinating sector because we need people in that industry and we need them fast, particularly around cyber and artificial intelligence. So we talk to Sue Lee all about that.
Yeah, it is a good chat. It is coming up after the show. Sean, we'll be back in a moment with the rest of the day's business news. Sean, Australia's third largest company, CSL, expects a doubling of earnings growth over the next 5 years as its core plasma collection business finally recovers from the COVID pandemic.
However, its vaccine and pharmaceutical operations will not grow as fast in the near term. Now, according to Chief Executive Paul McKenzie, revenue was higher over the past financial year, but unfortunately, operating costs were higher as well, and that triggered a 4.5% sell-off in the stock. CSL's net profit jumped 15% to just over $3 billion for the last financial year. McKenzie forecast a 10 to 13% rise for this financial year. Its main business is plasma collection. That was badly disrupted by the pandemic. CSL said collection rates are now on course to head back above the pre-pandemic levels. It's seeking to drive down costs and return margins in its core business back to more applicable or suitable levels, shall we say. CSL share price has moved around a fair bit over the past 5 years. It's currently down about 12% compared to its highs of early 2020. It's an interesting stock because people loved holding CSL and it traded at a premium to many other companies on the share market. It's kind of been re-rated by analysts, so it just really has struggled to break out of a range for a few years now.
Sean, the federal government has resisted growing calls to impose a full ban on gambling advertising, despite admitting that it can cause, quote, serious harm to the community.
Labor is expected to impose a partial ban, capping the number of ads on television, according to media reports. In response to growing pressure to implement the ban, Health Minister Mark Butler said that gambling is a service available in the community that consumed and enjoyed responsibly and in moderation can lead to no harm. But used to excess, used in a problematic way, well, it can cause real harm. Now, previously, an inquiry led by the late Labor MP Peter Murphy called for a full ban of ads. Independent Senator David Pocock yesterday said a partial ban on gambling ads is a betrayal of Ms Murphy's legacy, while Independent MP Sophie Scamps asked why the government won't support a full ban despite irrefutable evidence it affects young people's mental health. This is going to be an issue that we're going to hear lots more about, particularly in the run-up to the election.
Yeah, absolutely. Now, this is an interesting one. Paul Keating and Nancy Pelosi have traded barbs over the status of Taiwan, with the former United States House Speaker saying Keating's description of the self-governing island as Chinese real estate was a stupid statement.
Ah, yes, getting these two at each other. I think that's just fun, isn't it?
I wouldn't have expected these two to be kind of going at it, but it is fantastic because they both know how to kind of frame a barb.
Yeah, they're both elder statesmen. Keating, obviously, of the Labor Party in Australia, and Pelosi, the House Speaker, she's kind of the elder statesman of the Democrats in the US and played a pivotal role in what happened with Joe Biden and Kamala Harris. In fact, so what happened, basically the former Labor Prime Minister hit back yesterday declaring Pelosi had been recklessly indulgent and brought the US and China close to war by visiting Taiwan a couple of years ago, according to a report in the Sydney Morning Herald. Now, in an interview on the ABC 7030 program last week, Keating downplayed concerns about a Chinese invasion of Taiwan, saying the island was Chinese real estate. Pelosi responded, also on 7:30, and I quote, "You don't want to get my description of him for saying that. That's ridiculous. It is not Chinese real estate, and he should know that. Taiwan is Taiwan, and it is the people of Taiwan who have a democracy there. I think that was a stupid statement." There you go.
Yeah.
Say it as you think.
Yeah. Meanwhile, if you're the producers of 7:30, you're just there just rubbing your hands together. This is playing out live on TV. That is incredible. Now, online retailer Temple & Webster's share price jumped 23% yesterday after delivering record annual sales.
Sales last year jumped 26% to nearly $500 million, though the net profit was just $1.8 million. That reflected a one-off cost involved in the write-down of Israeli investment. For the first 5 weeks of this year, trading was up 26%, seemingly defying the cost of living crisis. Chief Executive and co-founder Mark Coulter said repeat customers now make up 57% of all orders, and tools such as augmented reality and virtual reality that test the size and look of products and better shopping and returns were proving successful with shoppers. Temple & Webster sells more than 200,000 products now, hundreds of suppliers involved, many of which are shipped directly to customers, enabling faster delivery times and reducing the need to hold inventory. Michael, its private label brand now generates around 30% of group sales. Quite incredible.
That is actually very high. And you've been talking about Temple & Webster for years. You kind of helped prop them up during the pandemic. Every second week you were talking about something else that you'd ordered.
Yeah, Jackie did a very good job propping them up during the pandemic. But she and I were only, a couple among thousands of couples who bought stuff at Temple & Webster. Their share price went through the roof. Then they took a dive. Yep. Seems to have come through that quite well, though.
Yeah, indeed. Now, online jobs group Seek's share price tumbled 6.6% yesterday after a significant reduction in job ad volumes across Australia, along with an impairment of its investment in Chinese group Zhaopin, pushed the group's full-year earnings to a loss.
Chief Executive Ian Narev didn't have a lot of good news for shareholders, saying the economic situation would weigh further on the company this financial year amid higher unemployment and less demand for hiring. He said, based on economists' forecasts, Seek has assumed paid ad volumes will continue to fall in 2025. Revenue last financial year fell 17%, while adjusted net profit fell more than 40%. Now, Seek previously has announced that impairment charge on Zhaopin was worth about $141 million.
The Australian housing market is proving a bit of a tough play for plasterboard maker James Hardie, compounding the impact of rising wages and freight charges for the group.
Not a lot going right. Hardie's share price fell 3% yesterday after it said pre-tax earnings in its Asia-Pacific division, which is mostly Australia, had dropped 11% in the June quarter. The reason? Rising costs and high property prices are deterring potential renovators. The group's net profit was up 2% for the 3-month period. That's across the whole group, thanks to its good performance in North America. That makes up about 70% of Hardie's revenue.
Packaging giant Aurora has rejected a $3.4 billion takeover offer from US private equity group Lone Star Fund 12 Acquisitions. And Sean, there aren't enough funds that have Roman numerals in their names.
No, Lone Star Fund 12 Acquisitions. A $3.4 billion takeover offer would often lead an episode of Fear and Greed, I reckon. Yeah, this didn't quite make the grade just because so much is going on.
Yeah, it's a busy week.
So Aurora, which reports its earnings today, said the bid was opportunistic, conditional and non-binding, but that didn't stop the group's share price jumping 19% yesterday, best on the ASX 200 to $2.27. Now, the bid's priced at $2.55 per share, less any dividends declared or payable. We'll know more about that today after the earnings are out. That means that share price now is probably less than the bid price, but clearly Aurora is in play. The board of Aurora yesterday said the bid undervalued the company, but this one ain't over yet.
I just love the lack of creativity that has gone into naming these funds because that is Lone Star's 12th opportunity fund. So assuming, following that logic, that the other 12 Lone Star Fund 1 through 11.
Possibly.
It's like naming all of your kids the same thing.
I presume it's a Texas-based fund. So there's got a little bit of creativity in Lone Star.
Yeah.
Because that's a Lone Star state.
Yeah. No. Anyway, bring back Roman numerals. Annuity and funds manager Challenger, Sean, said it is selling record numbers of retirement products as retirees and pre-retirees worry about cost of living pressures.
Don't say it. I know you're going to have a go at me for this, why I'm writing about this story. Yep. Challenger, yes, announced a 17% increase in profit last financial year thanks to a doubling of sales of its annuity products. Now, annuities provide a set income for anywhere between about I don't think you can go shorter than 2 years, but basically for the rest of your life if you want. The surge has come in annuities linked to inflation, not surprising there, given that inflation has been rising. Now, the increase in interest rates in recent years has made selling an annuity much, much more attractive. Chief Executive Nick Hamilton said the funds management business reported an 11% drop in underlying earnings, even though funds under management rose. Challenger's share price closed up 6.5% yesterday, one of the best of the top 200.
I've never thought of you as a pre-retiree before, Sean, until you kind of led me to that point just then.
Well, if I'm a decade away, is that pre-retiree or not? Surely. No?
I don't know. I suppose to a young person like me, it's just quite broad. Like anyone over that certain age, i.e. your age, I'm assuming pre-retiree. You're on the cusp.
Yeah. Anyone over 40 is pre-retiree to you?
That's right. I'm inching closer to pre-retiree status myself in that case. Turning to international news now. Elon Musk wants a job inside Donald Trump's White House after the Tesla billionaire and Republican nominee for presidency held what can only be described as a bit of a love-in on X yesterday.
I think so. Mr. Musk pitched himself as the man to cut federal spending in a discussion on X, a platform that actually rejected Mr. Trump when it was Twitter, only to allow him back on when Mr. Musk bought it. Could you imagine Elon Musk cutting costs? I mean, when he went into Twitter, as it was known then, he just wiped out half the staff.
He sacked everyone. Yeah.
Wasn't a lot of discussion. Yeah. It was quite funny because the event was delayed for 40 minutes, which Mr. Musk blamed on a cyber attack. And then when they were on air, he kind of alluded to the cyber attack coming from Trump enemies. Now, absolutely no evidence of that whatsoever. The conversation included the risk of World War III and Mr. Trump's desire for the US to have an Iron Dome similar to Israel's. He called Kamala Harris, actually, he didn't call Kamala Harris. I think he said Kamala or something. Kamala, he misused her name. Kamala Harris, a third-rate phony candidate. Mr. Musk endorsed Mr. Trump for president last month, part of a shift that's seen the Tesla and SpaceX chief executive officer publicly embracing right-leaning causes and candidates. He's advised Mr. Trump on electric vehicles and cryptocurrency policy, which is a reversal from a once rocky relationship that saw the two trade insults, highlighting Mr. Musk's growing sway with Mr. Trump. The former president, long a critic of electric vehicles, praised the EV maker, saying Tesla's cars are incredible.
Speaking of just how incredible those cars are, Sean, I'm going to include in today's Fear and Greed newsletter a bit of a throwback video. It's a couple of years old now, but it goes back to when one of those vehicles was being demonstrated live on stage and things did not go quite right for Elon Musk.
I know the video. It's fantastic.
It is a classic video. I will put a link to it in today's newsletter. Head along to fearandgreed.com.au and sign up for the newsletter if you haven't done so already. It'll be out in a few hours' time. Up next is the Fear and Greed daily interview with Siu Lee Xiao from the Australian Information Industry Association.
Yep, all about employment in the tech space and the fact that graduates aren't really being fully prepared for the jobs they're taking.
Yeah, it is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It is Wednesday, the 14th of August, 2024. Make sure you're following the podcast and please join us online as well on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.